again, everyone. It's me, John Glougie, the Associate Portfolio Manager at Luft Financial IA Private Wealth. For those of you who may or may not know, I also wear the insurance hat in the office. Doesn't make me a lot of friends, but I wear it anyways. And that's what we're really here to talk about today: risk management. Maybe let's define what we mean when we say the term risk management. For us, it's really the final overlay that you put on your financial plan. So in other words, when you spend all that time creating the financial plan in the first place, setting goals, developing strategies, and implementing strategies, the last thing we should probably do is look back at that financial plan and try to poke holes in it. And if you can, that's risk management. Risk management is simply filling in the cracks, filling in the holes to make sure that your plan is buoyant. So with risk management, we have to ask ourselves, what's truly at risk? What is at risk within my financial plan? And today we're going to give you a broad overview of three of the most glaring ones, we would say. And that would be your family, your income, and your savings. So let's start with income. Very important because it's what drives the entire plan, especially while you're still implementing it. While you're working, your income is what allows you to pay for your bills, pay for your mortgage, put food on your table. It's also what allows you to fill your buckets like your RSPs, your TFSAs, and save for the long term. So it's very important to protect. And what would happen if you lost the ability to pay your bills or fill your buckets? Probably find that the financial plan itself would sink. So how can we protect your income? Well, we can look at income insurance, also known as disability insurance, but that sounds far more bleak, so let's call it income insurance. And what is income insurance? Well, it typically replaces about 60 to 70% of your take-home pay, your net pay. Never 100% of it, because the insurance companies want to leave the incentive for you to get better and go back to work. But it does provide you with some relief should you not be able to go back and do any work because of injury, both physical or mental. And what do we mean by risk management when it comes to your portfolio or your savings? What would possibly put your portfolio or savings at risk? A lot of people might think market volatility, market returns. We look at it slightly differently. We just look at it saying, if you put money away into all of your buckets, whether that's your RSP, your tax-free savings account, or some other savings vehicle, we're assuming that this money is being put away for some sort of goal that you've outlined within your financial plan. So what would happen if a life event happened and you needed to tap in or dive into some of these buckets to access some of this capital? You probably still can, but now does that upend the goal that you had earmarked for that money for in the first place? So as a solution to this, you might want to look at portfolio insurance, also known as critical illness insurance. Now, what do we mean by that? Well, with critical illness insurance, you can actually pay a small monthly premium and get a safety net built under your portfolio, so that if you do get sick, if you have a heart attack, if you get cancer, you don't have to dip into your savings, which are already earmarked for other goals. You can simply go back to the insurance company. It's kind of like being in high school and getting a doctor's note to get out of class. You go and you get the proof that you've suffered the illness, you provide that to the insurance company, and they give you a lump sum tax-free benefit that you can spend however you see fit. But what it really does is keep your portfolio intact for the goals that they were initially earmarked for. So disability insurance and critical illness insurance can certainly protect your family simply by protecting your financial plan. But what happens if you're no longer around? Those two types of insurance protect you while you're still alive. But if you pass away, we have to look at the family and say, what have we left them with? If it's just a bunch of assets, you'll be missed, but maybe not that much. But if you leave them with debt, you'll be missed and you're probably not getting a very nice funeral. So if you do pass away with debt, something like mortgage debt, or even a car payment or a student loan, who is going to inherit this debt? In this case, it's likely your family. So how do we address this? We can look at life insurance. And with life insurance, we have two broad categories, both term insurance, which is better suited for shorter term needs, things like covering your mortgage or any sort of loan or debt that you may have, as well as permanent insurance, which will be a better help for you when it comes to the final estate taxes, probate, things of that nature. So again, just to recap what I just said, term insurance is the cheapest insurance you can find. There's no intrinsic value to these policies. It's kind of like renting insurance. And that's what makes it perfect for shorter term insurance needs, like covering things like debt. The biggest pitfall with term insurance, though, is that you cannot have it for the rest of your life. It will likely expire before you do. So that's why it's not a big help planning for your estate, unless you plan on dying before, say, the age of 80, which no one should have on their goals list. When we start talking about estate risks, now we're talking about permanent insurance. So what are some of these estate risks that I'm talking about? Well, on one hand, there's the contestability issue from a will. So you might have all of your affairs in order through your will, but just remember, immediate family can always contest this. And as the old adage goes, where there's a will, there's a relative. Also know that when it comes to estate taxes, the will can do very little to help you with those. We're going to have to address those with something like permanent insurance. And even if we do a fantastic job structuring our affairs in such a way where we've left very little in the estate itself, so very little assets subject to estate taxes, there's always still probate. And for anybody who doesn't know what probate is, think about it this way. There's two guarantees in life, death and taxes. And we've just added a third. It's a death tax called probate. Probate is simply the cost of taking your will through the court system to make sure that it's valid. And there's a cost to this, 1.4% in British Columbia. So if the thought of probate eating to your estate so that you have less of an estate to pass on to a family member or a friend or both, then what you might want to look at is permanent life insurance. When you pass away, the policy can pay directly to a beneficiary, tax-free outside of your will and estate, and that tax-free payment can then be used to pay the estate or probate tax bill, and then the estate remains whole and it can be passed on to your beneficiaries. So as I mentioned, today is more or less just a chance to give you a general overview of what we mean when we say risk management. But it's very important to consider, and just like your investment portfolio, it's worth it to have a review of your insurance or your risk management overlay on your plan annually, every 2 years, every time you have a major life event or life has changed or pivoted in any way or your goals change. It's worth reviewing your insurance to make sure that they're still working for you. And just remember, even if you are a member of a group insurance plan, even those are worth reviewing, because you might find that despite laughter being the best medicine, you're only covered for chuckles, snickers, and giggles. And try saying that 3 times fast. So if you'd like to have a risk management review, or even just look at your own financial situation and make sure that your insurance is in fact working for you, please feel free to contact us and we'd be more than happy to talk to you about it. Thanks and have a great day.